Good afternoon, everyone. This is Henry, and as we get into tonight's video review, I wanted to give you a stat that my good buddy Neil had posted into our Slack this morning. You guys know Neil from other videos here at Simpler, but he really shared what I thought was an interesting stat, and I will leave you the video if you want to pause it and read through the entire stat here. But I think it's an interesting spot to essentially compare looking at the past of the SPY and of gold, seeing how they have performed over, in the case of the S&P, the past 2 quarters, and then in the case of gold with these closes above $2,000 an ounce. So again, I'll leave this for you if you want to pause and take in those full statistics for yourself, but I take them to note bullish potential because of the way the past has unfolded in these situations, and then that gives me a segue to come over and look at with you what I believe are some of the most important squeezes in the market. Again, followers of this channel will probably be familiar with the squeeze setup, but if the weekly bar closes in its current formation, we're going to see an SPY weekly squeeze that is fired to the long side, and I think that could take us at least into 429. From there, I want to assess whether or not that resistance holds, and then I'll make my next round of decisions from there. But if those stats are good, we've got a couple more weeks of strength ahead of us, and I at least want to look for 429 in that particular ETF. Now moving over into gold, which is the other spot where he provided some of those helpful stats that in summary say, when you see performance like what you've seen from gold in the first quarter of a year, you're usually going to see continued performance throughout the year. So I'm not telling you that this will not come without a gut check. You've got to really make sure your risk is in control, and this also may not be the time, right? Gold may be getting ready for a pullback down into something like 175. Anything in this vicinity would still be a buy. But what I'm trying to tell you is that if the performance of gold is going to continue to do well this year, selling out of the money puts with the intention of taking assignment if things don't go perfect. If it just keeps selling off, okay, then for every 1 put you sell, you'll take 100 shares. That's one part of the trading plan. Then the other piece is that, say, maybe gold instead resumes its bullish trend from the 21 EMA. Well, if that continues on, then you work on taking profit on those short puts around 50%. And if you can put a trading plan like that with those statistics and a monthly squeeze that looks good, I think you can make some money with it. So wanted to give you guys that in tonight's review. I hope you find it helpful. Have a great April expiration, and I hope to see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.